Hello students, welcome back to 7th session on consignment accounts. Let me continue with some problems on consignments. We know that we have already discussed in detail with regard to two problems. We were in illustration 3. Let me continue with illustration 3. Just look at illustration 3. Sushma consigned 10 bicycles costing 1500 each to Smita on 1st March 2017, paying rupees 750 as freight and 250 as insurance. So Smita is consigner. She consigned 10 bicycle to Smita. Smita is consignee at cost, not at invoice price. And Sushma means consigner incurred 750 as freight and 250 as insurance. Then Smita accepted a bill drawn on her by Sushma for rupees 10,000 on 15th March. So means Sushma draw a bill and sent it along with sending goods, and that bill was accepted by consignee, that is Sushma. It means 10,000 rupees given by Sushma as advance by accepting the bill. If you look at journal entries which I have sent, it is there. Advance given by consignee. In the books of consignor, journal entry is cash if advance is received in cash. Bank account data if advance is received in check. Bills receivable account if advance is given by accepting the bill. So here bill is given. Acceptance for bill was given by consignee, that is Smita, which was sent by consigner. So means by accepting the bill, she accepted to give 10,000 rupees to consigner as advance. Then paid golden rent. Who paid golden rent? Smita. Smita means consignee. Consignee paid golden rent of 400, insurance of 250, unloading charges of 100. All these are expenses incurred by consignee. You just check it out of these which are recurring, which are non-recurring. At least have a knowledge on what are non-recurring to consignee as well as consigner. They are entitled to a commission of 5%. Smita entitled to a commission of 5%. Smita sold 8 bicycles of rupees 2050 each and sent bank draft for the amount due after deducting their commission, expenses and advance. So she is entitled to get 5% commission, again ordinary commission. There is no indication with regard to del creditors or extraordinary commission. Smita sold 8 bicycles. She received 10 bicycles, but she sold 8 bicycles. There will be 2 bicycles with Smita at the end of an accounting period. So we need to calculate consignment stock. And Smita settled the amount to Sushma by giving in terms of bank draft after deducting what and all expenses she incurs, what are the commissions she's having right to get, and what is the advances she has already given. By deducting these things, she settled the amount by giving bank draft. What they asked, we need to prepare ledger accounts in the books of Sushma. Sushma means consigner. So if they ask us to prepare ledger account, we need to prepare 3 accounts. One is consignment account, the other one is consignee account, the other one is goods sent on consignment account. So in consignment account, you know that we need to have format for all 3 accounts. Goods sent to consignment account, we need 2 to 3 lines, not more than 4 lines. You keep it at the end. Then consignee account, we need 10 lines minimum. Consignment account will be big account, have a format covering 10 to 15 lines depending upon problem. This problem is very simple, so and very less transactions are there, so we need 8 to 10 lines. Try to understand. Have a format of consignment account, consignee account and goods sent to consignment account. All 3 accounts at a time. Try to understand, because we are reading problem n number of times before we start solving. Once we start solving, we are reading only once. Again and again, we are not concentrating on a sentence which was already read. Try to understand. That's why you need to have format of all 3 accounts. Just let me start solving the problem. You read 1000 times, no problem at all before solving the problem, but once you start solving, so read only once. Just go through that and finish up the work relating to that sentence. Sushma consigned 10 bicycle costing 1500 to Smita on 1st March. Till that only you read. So goods, there was no information with regard to opening stock. Even in last 2 problem also it was not there. Directly goods consigned is there. Whenever consigner, that is Sushma, consigns goods to consignee, that is Smita, the journal entry in the books of Sushma, that is consigner, is consignment account debtor to goods sent on consignment account. See here, it will create impact on two accounts, consignment account, goods sent on consignment account. On debit side of consignment account, 10 into 1500, immediately go to goods sent on consignment. On credit side, you write by consignment 15,000. So that one transaction completely posted, entries relating to first transaction completely posted to two accounts, one to consignment, other one to goods sent on consignment account. The next one is paying rupees 750 as freight and 250 as insurance. Sushma incurred 750 as freight charges, 250 as insurance charges. Means consignor incurred expenses. When consignor incurs expenses, what's the journal entry? Consignment account debtor to cash. You do one thing while writing to cash. Under that, in bracket, you write 750 for what, 250 for what. So that while recognizing whether it is non-recurring or recurring, you need not go through problem again. You just go through the accounts, consignment account where you have already recorded 750 is relating to which expenses, 250 is relating to which expenses. That's a good thing or the good habit. So consignment account debtor to cash. We are not preparing cash account, so only in consignment account this transaction will come. Then Smita accepted a bill drawn on her by Sushma for rupees 10,000 on 15th March. Smita gave advance by accepting the bill. Whenever consignee give advance, either in cash or in draft or in acceptance of bill, in the books of consignor, the journal entry is as it is acceptance of bill. So bills receivable account debtor to consignee's account. It will go to bills receivable account and consignee account. We are not preparing bills receivable. We are preparing consignee, that is Smita's account in the books of consignor. So journal entry bills receivable account debtor to Smita's account 10,000. So then unpaid Gordon rent of 400, insurance of 250, unloading charges of 100. All these are expenses incurred by Smita, that is consignee. When consignee incurs expenses, journal entry is consignment account debtor to Smita. Means consignee's account 400 plus 250 plus 100, right? For what is 400, 250 and 100 in bracket after recording to Smita on debit side of consignment, so that it will be useful for us to know it later. So 750. So it will be recorded in consignment account and even in consignee's account. Journal entry in consignment account debtor to Smita's account 820. Sorry, not 820, it is 750. 820 is relating to something else. And they are entitled to a commission of 5%. Consignee is entitled to a commission of 5%. Journal entry for the commission due. We don't know the sales so far. That's why we just record the entry. Consignment account debtor to consignee's account. Don't write the amount. Even in consignment account and even in consignee's account. By consignment in consignee's account to consignee in consignment account. Don't record the amount. Amount we will record once we know the sales. Then Smita sold 8 bicycle for 2050. Whenever Smita sells goods, consignee sells goods, journal entry is consignee's account debtor to consignment. On credit side of consignment, 8 into 2050, 16,400. On debit side of consignee, Smita's account debtor to consignment, 16,400. Now we came to know about sales. So as far as the commission is concerned, so we recorded the we passed the entry, but we have not filled amount column. So 16,400 into 5 by 100, 820 on debit side of consignment, on credit side of consignee. So we passed entry for everything and even we filled amount column also. And the last sentence, sent a bank draft for the amount due after deducting their commission expenses advance. Smita has sent a bank draft for settling the amount due to consignor. When consignee settles the amount due by paying in terms of bank draft, in the books of consignor, journal entry is bank account debtor to consignee account. So in consignee account by bank, after deducting all these three, advance, expenses and what is that? Commission. So 16,400 is the sales made, minus 10,000 advance, minus 820, minus 750. So the balancing figure in Smita's account itself is the final settlement. So 4,830. So that consignee account get closes. Which account get closes? Consignee account. So now it will not be recorded in consignment account. Settlement will appear only in consignee account in the books of consigner. Now, before we calculating profit or loss arises out of this consignment to consigner, we need to see whether there is closing stock. Yes, there is closing stock. Pass the journal entry. Entry is consignment stock account debtor to consignment account. Then have a note. So first we have to calculate the how many number of bicycles unsold. 10 minus 8, that is 2. So cost of 2 bicycle, 2 into 1500, 3000 plus proportionate non-recurring expenses incurred by consigner. Consigner incurs 750 for freight, 250 for insurance, totally 1000. Freight is also non-recurring, insurance is also non-recurring. So 1000 rupees he has incurred for 10. How much for 2? So it will become 200. Again, proportionate non-recurring expenses incurred by consignee. What consignee incurred? Consignee incurred 400 as burden, 250 as insurance, and unloading charges of 100. Try to understand. Burden rent, unloading charges, and insurance. Of which 100 rupees only non-recurring expenses. For what she spent 100 rupees. So that is unloading charges. So for 100 rupees she has spent for 10 cycle because she received 10 bicycles. How much for 2? It will become 20. So the total value of closing stock is 3220. We have already passed the journal entry consignment stock account debtor to consignment 3220. So you close consignment account by calculating difference between credit side and debit side. As credit side is more than the debit side, there is a profit to the consigner because of this consignment to the extent of 2050, which is a balancing figure, and transfer it to profit and loss account. Now we need to close goods sent on consignment. I have already said goods sent on consignment account can be closed by transferring it to trading account. In case if the concern is a manufacturing concern, so you close it by transferring it to trading account, which is 15,000. So all three accounts get closes. See. In first problem there was no closing stock. In second problem we prepared consignee account and we passed entry even for settlement made by consignee. In third problem one more account we studied, goods sent on consignment. In case if they ask you to prepare necessary accounts in the books of consigner, you need to prepare consignment account, consignee's account, and goods sent on consignment account. So now move towards illustration 4. Mr. Rajesh consigned to Satish 1000 kgs of flour costing 10,000. He spent 100 as forwarding charges. 12% of consignment was lost in weighing and handling. Satish sold 800 kgs of flour at rupees 15 per kg. His selling expenses being 400 and commission at 5% on sale. Prepare consignment account in the books of Rajesh. Rajesh is consigner, not consignee. We need to prepare accounts in the books of consigner. So consignment account. What else? They prepared only consignment account. They have not prepared consignee's account. See, they asked us to prepare only consignment account, so they prepared only consignment account. So let me read sentence by sentence. Have a format of consignment account in the books of consigner, that is Mr. Rajesh. He consigned 1000 kgs of flour at a cost of 10,000 rupees. So total cost of goods sent, it is not per kilo 10,000, it is total. For 1000 kilo, 10,000 rupees is the cost. So consignment account debtor to goods sent on consignment 10,000. In case if they ask us to prepare goods sent on consignment, it will go to credit side of goods sent on consignment. He spent 100 as forwarding charges. Who? Rajesh. So when consigner incurs expenses, journal entry consignment account debtor to cash 100. 12% of the consignment was lost in weighing and handling. So after it reaches to, before it reaches to consignee, not after, while weighing and handling, 12% of consignment was lost. Try to understand. So you just look at loss on consignment. There are two types of loss, normal and abnormal. Abnormal loss arises out of unexpected reason. Normal loss arises out of expected reason. When you weigh and handle, it is because of your negligence there is a loss. It is not because of natural calamities, it is not because of accident or strike there is a loss. If loss arises because of your negligence in weighing, handling and evaporation, leakage, breakage, all these things are normal loss. So it is a normal loss. That's try to understand. 12% of consignment was lost. So it's a normal loss which was incurred before it reaches to the Godan of consignee. That is very much important. Try to understand. So there is no separate entry for normal loss. When there is normal loss in a problem, you just read fully what is normal loss, what are the reasons for normal loss, what is the accounting treatment for normal loss. I have already given you notes. In accounting treatment I said there is no separate entry for normal loss, but in case if there is a normal loss, it creates impact on calculation of closing stock in the books of consigna. So that's why there is no entry for it. Satish sold 820 kgs of flour at 15 per kilo. So he sold 820. When consignee sells goods, journal entry consignee's account, that is Satish's account, debtor to consignment 820 into 15. Then his selling expenses being 400, commission is 5% on sale. He incurred a selling expenses of 400. When he incurs a selling expenses, journal entry consignment account debtor to Satish's account 400, and he is liable to get 5% commission on sale. Journal entry consignment account debtor to Satish's account 12,300 into 5% 615. See, we consigned 1000 kgs of flour. While weighing and handling 12% was lost, and consignee got 820 kgs of flour, sold 820 kgs of flour. Definitely there is closing stock. That's why before we closing consignment account, we need to calculate closing stock. See, calculation of value of closing stock. Cost price of 60 kgs. 1000 kgs were sent. That's 12% means 120. 820 was sold. How much is left? 60 was left. Try to understand. So 60 into 10 is 600. We need to add only expenses incurred proportionate non-recurring expenses incurred by consignor only, because try to understand, in this problem there is no non-recurring expenses incurred by consignee. One thing again, and we assume that this loss arises before it reaches to consignee. It is because of these two reasons we are not adding proportionate non-recurring expenses incurred by consignee. So what is the expenses incurred by consignor? Forwarding charges. It is non-recurring. So he forwarded 1000 kgs. So for 1000 kgs, how many kgs? Yes, 1000 kgs he incurred 100 rupees. For 60 kgs, how much? It is 6. So value of closing stock will become 606. In last two problems, we added even proportionate non-recurring expenses incurred by consignee because there was what is that? Non-recurring expenses incurred by consignee. In this, there is no non-recurring expenses. What was the expenses incurred by consignee? So he incurred selling expenses. Selling expenses is not non-recurring to consignee. That's why we are not adding. Did you get my point? If non-recurring expenses are incurred by consignor and consignee, then only you add proportionately. Otherwise, don't add. So, journal entry, consignment stock account, debtor to consignment account. Now, we need to close consignment by calculating difference between debit and credit side. As credit side total is more than the debit side total, profit is 1791. So, this is all about fourth problem. Let me move towards fifth problem. GCOS Toys Limited consigned 1000 toys to Twinkle Toys at an invoice cost of rupees. At an invoice cost of rupees 150 each. GCOS Toys Limited paid freight insurance. During the voyage, 100 toys were totally damaged. Voyage means during transportation. Means before it reaches to consignee, there was what is that? Damage by fire. There was damage of goods by fire, and it has been thrown overboard. Means damage were thrown before it reaches to consignee. Twinkle Toys took delivery of remaining. See, we sent 1000 toys, but 100 toys gets destroyed on while it was in transport, so means while it was in transit, so it was overthrown, so it was thrown overboard. So how many toys were reached to consignee? 900 toys were reached to consignee. He paid 14,400 as custom duty. Twinkle Toys sent a bank draft to GCAS Toys Limited for rupees 15,000 as advance payments. In last problem, advance payment was in the form of acceptance of bill. In this problem, it was in the form of bank draft. And later sent an account sale showing 800 toys had been sold for rupees 220 each. 800 toys were sold for 220 each. Expenses incurred by Twinkle Toys on golden rent and advertisement amounted to 2,000. Twinkle Toys, what is that? Twinkle Toys was entitled to a commission of 5% and settled their account. Prepare consignment account, Twinkle Toys account and abnormal loss account in the books of ZCAS. See, if loss arises due to expected reasons, that will become normal loss. There is no separate entry for normal loss in the books of consignor. Anyway, that will not be recorded in consignee book. If there is abnormal loss, what is abnormal loss? Loss arises out of unexpected reason like what is that? Fire, theft, accident, civil strike, all those things. Such are because of flood. So if such loss arises, that loss is known as abnormal loss. When there is abnormal loss, there is separate treatment for it, accounting treatment for it. When there is normal loss, there is no separate accounting treatment. When there is abnormal loss, there is separate accounting treatment for it. Means we need to calculate value of abnormal loss, and at the same time, listen carefully, we need to calculate value of abnormal loss, and at the same time, we need to prepare a separate entry account for it in the books of consignor. That is abnormal loss account. In addition to necessary accounts such as consignment account, consignee's account and goods sent on consignment account, if there is abnormal loss, we need to have separate account for it. So totally 4 accounts we need to prepare in the books of ZCA. ZCA means consignor, ZCA Toys Limited. See, they prepared consignment account, Twinkle Toys account, abnormal loss account. They have not prepared goods sent to consignment account. It's so easy, we can prepare goods sent to consignment account. See, in all 4 problems where we had solved, in all 4 problems, previous 4 problems, we have not come across what is that? Abnormal loss. In this problem, we had come across abnormal loss. That's the difference between last 4 problem and this problem. In last 4 problem, we have not prepared abnormal loss account in the books of consignor because there was no abnormal loss. But in this problem, we need to prepare. In last 4 problems, particularly second problem onwards, we started calculating value of closing stock. In this problem, in addition to calculating value of closing stock, we need to value one more thing, that is value of abnormal loss. So that is the difference between this problem and last 4 problems which we have already solved. We will discuss in detail about this illustration, particularly in next session. Till that, take care. Before you moving towards next video, read theory which was given to you in advance. In that, I have given you what is the treatment for abnormal loss, what is abnormal loss, when abnormal loss occurs, all those aspects. Please read that theory. Then mentally, after you preparing mentally for 5th problem, concentrate on video which will be sent to you, particularly relating to 5th, 6th and 7th problem. Till that, take care. Thank you.